Let's start off by talking about this geopolitical tension that is occurring. We know that the EU is standing by the US, so it's creating a lot of concern as to who's going to fill this gap. This supply gap that we're going to start seeing. It seems that West Africa is starting to enjoy a lot of appetite and a lot of attention from a lot of the states, especially Asia. Can this actually be sustained, given the fact that capacity also needs to be increased dramatically to deal with the demand?
That's a very good question, and it's not really clear how much supply gap we're talking about. In Europe, we know that in the third quarter of last year, Europe, that's to say the European Union, took about 700,000 barrels a day, which is the equivalent of 7 large crude carriers every single day. In Asia, we're not sure whether the volumes will drop eventually or whether they may in fact rise. What's happening at the moment is that Iran, the European Union, the United States, of course, and also China and India, who are the major consumers, are negotiating hard on the Iranian exports that are likely to follow later this year, and are all trying to get the best deal out of it. On the American side and the European side, what they want is to get maximum pressure on the regime in Tehran, on the Islamic Republic, to try to get them to curb their nuclear program, which they think is designed to produce an atomic bomb, though of course Tehran denies that. On the Asian side, the Asian consumers are essentially trying to get a better price. So what we found over the last few days, and the last few months even, is that Asian customers, particularly China, have been buying alternative levels of crude from places, typically West Africa, recently. And that is a way of, we think, of putting pressure on the Iranians to lower their prices. Effectively, the Asians are saying, we'll buy your oil, but we want it quite cheap, please.
It's quite fascinating here because it seems that the EU and the US don't want to buy oil from Iran anymore because of the nuclear program, but it seems that China is starting to find this as an opportunity to bring the prices much lower. Given the fact that now West Africa is starting to experience this attention, are we going to start seeing an increase in capacity by the West African states? Do you think that China is just using us as a scapegoat at this point in time to try and bring the prices lower when it comes to Iran?
Well, that's a very good question. I mean, on the one hand, West Africa needs to invest quite heavily in order to improve volumes, and a number of countries, particularly Angola, for example, have been pouring money into exploration and production, and they have been increasing. Indeed, a couple of years ago, Angolan production was pushing 2 million barrels a day. That's an awful lot of oil. At one point, they even overtook Nigeria as a producer. But many countries, particularly Nigeria, face all sorts of problems. You'll be aware of the difficult economic, financial, political environment even in Nigeria. That has been holding back investment. For some of the other countries, there have been quite large expansions of production. Ghana, for example, Equatorial Guinea, Congo, DRC, these have all increased production. It's a slow process, but it's fairly inexorable. I mean, total West African production over the last few months has been running at, well, 4.4 million barrels a day. That's an awful lot more than we had just a few years ago.
So West Africa's oil, I mean, we know that it's low sulfur crude oil. It's very high quality. The question is, I mean, if we see that China is putting this pressure on Iran, what kind of levels are they actually buying the crude oil from West Africa? Are we looking at market prices here, or do you suspect that they could be buying it at a discount to the world prices?
I don't think that's going to be, there are going to be discounts for West African crude from this particular development with Iran. As you say, West African crude is extremely highly sought of. It's very low in sulfur and other contaminants that are corrosive, for example. So I don't see that coming. I think it is possible that if the negotiations proceed well with the Chinese, from the Chinese point of view, and Iran is able to secure medium and long-term deals to supply more oil, not less, to China, that actually may put pressure on West African crude prices, and we might see that West African output or sales to the West decrease, because you have to remember that Libya, which is, as a producer, was out of action for the best part of a year last year, thanks to the turmoil with the overthrow of Gaddafi. Now, that, as a producer, is now back in full force. We're only about 200,000 or 300,000 barrels a day below where exports were before that civil war started.
So Christopher, as you say,
combined, it could mean that prices will fall.
So as you say, Christopher, it seems that China is trying to negotiate long-term contracts with Iran. Is China trying to secure long-term contracts with West Africa so that we can further capitalize on the fact that we're seeing geopolitical tensions and supply constraints from other regions, or are we just being used, if I could call it that, for now, so that China can get what it wants?
That's not true. That's not by any means clear. I mean, traditionally, the Chinese haven't bought oil from West Africa on long-term contracts, though Chinese companies, many of them, have long-term supply contracts which they negotiate on an annual basis. The main trading arm of Sinopec, the state oil company, that company is called Unipec, is already taking 20, 25, 30 or more cargoes every month to China, and that those volumes over the last 4, 5, 6 years have just been rising inexorably year after year. So I don't think it's bad news for West Africa. It could be good news, but the price implications really are unclear at this point.
So as you say as well, I mean, China has, of course, increased its imports from Angola in particular by 20% from March to December. Quite a nice increase there. Do you think that we can actually secure, because the point is we need to start securing new consumers, new clients, so that the West African states can actually start ploughing that money back into increasing capacity?
Yeah, I mean, quite what it does with its oil receipts, of course, is up to the Angolan government and the state-run enterprises. But I would expect that Angola will have absolutely no problem in future selling 100% of its oil. Its quality is very, very high, as we've said, and it's in high demand. It's interesting at the moment. There's been pressure, ironically, on the lighter low sulfur crude oil in the West rather than the heavier, and that's because typically the Chinese are taking more of the heavy product than the light. Also at the moment, of course, after the tsunami, the terrible events that happened in Japan at the beginning of last year, many power stations in Japan are taking crude to burn it, to run power stations. That's something they didn't do before, and they're obliged to do that because so much of their capacity for generation has been taken out.